What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring all of you this evening. So what we're going to be talking about in this update is some really solid bullish news that we have received throughout the day today in the form of a new 13F filing. Now, this really got overlooked due to the fact that everybody's attention was really focused on this SEC and Citadel lawsuit, and for good reason. We got a lot of information out of that court hearing today, and there's just going to be more to come. But I also think that a lot of people have been thinking about, or at least slightly worried or curious about whether or not these really big institutions that own very sizable positions on AMC were adding to their positions, holding their positions, or trimming a portion or all of their position or exposure on AMC at the current time. Now, this institution in particular, this position add, in my opinion, is even more bullish than any of these other institutions adding, because it is a newly initiated position and it is a $53 million investment. Now, again, when we do talk about institutional purchases, a lot of people bring up the concept of, well, if these institutions are buying a significant portion of these shares and the borrow fee rates on AMC are slightly higher than normal on any other stock, well, they could just be lending out those shares and helping flood the market with supply that is going to artificially suppress the price. But I do have a counter argument for this. There are two sides to every situation, and that is going to come in the definition in how forced share recalls actually go out. Now, in addition to that, there is also something very interesting on Ortex that I've been noticing over the last couple of weeks that I want to point out to you guys as well, and it ties into this whole entire thing. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So AMC closed the day today at $36.83. Very solid way to start the week. Not too green, not red at all, but always a good way to start the week when we see a green day. Now, when we come over to this Ortex update, the utilization has not changed from today's earlier update, still at 86.01%. And at the current time, it's not really putting the pressure on these institutions to issue those for share recalls, but more on that in a little bit. Now, when we look at the estimated short interest, we're sitting at about 16.25%. And a lot of people were a little bit worried over the last couple of weeks when we saw the short interest start to come down, but didn't really see the price reflect that potential amount of shorts covering. But what we really need to think about here is the big picture. First, these are just the estimates that we're seeing on Ortex. The actual short interest on AMC could be much, much higher at the current time. And if the shorts are not covering in any significant fashion, we are just seeing those shares go out on loan, come back in, and then get loaned out again in that cycle to not really affect the price. But the important thing that I think we need to keep a lookout for is these two numbers right here, the returned and borrowed shares. Previously, we have seen the market for loanable shares of AMC, as reflected on these Ortex updates, go above 10 million shares on returned and borrowed shares on a daily basis. Now, recently, we are not seeing that at all. Now, this is going to tie into what we are going to talk about in a little bit, so just keep that in mind. Now, let's get into this big institutional purchase. So when we come over to Fintel over here, we can see right here, Sumitomo Mitsui Trust purchased 1.4 million shares of AMC in the third quarter, and that position is valued at $53 million. That is a very significant purchase. And as we can see here, since it's highlighted in green, this is a newly initiated purchase. So they obviously see a lot of upside in this investment at the current time. Very good to see, because we know that these institutions have access to a lot more analytical capability on a day-to-day basis and a lot more data than we as retail investors have. So when we look at these institutional ownership changes, it is always good to see that institutions are adding. Now, when we think about the whole flow of institutional purchases and whether or not these institutions are going to be adding or subtracting from their AMC positions, I think we need to think about what has happened over the last 6 months. Now, we did see a lot of institutions that had sizable positions at these lower levels. We saw the run up into the 70s. We fell back down in the second quarter, ended right around here. But when we saw that sell-off in that price run-up, we also saw a lot of institutions piling into AMC, as reflected right here in these Q2 institutional inflows and outflows. $1.19 million was bought and only $409 million worth of AMC has been sold. This is a very good sign to see. And again, I think this is just going to be a sign of things to come, because already in Q3, we're seeing $61 million worth of AMC has been bought, but only $392,000 worth has been sold. Now, if you guys go to this page as well, I do want to point something out. You are going to see this institutional ownership percentage right here being 24.9%. And you may think to yourself, well, I remember Adam Aaron said retail investors owned 80%. So if retail owns 80 and institutions own 24.9, well, that should be evidence right there that we own the flow and there's naked shorting in their synthetic positions. That's not necessarily the case. One, these institutions are cycling out their positions a lot. They do a lot of rebalancing, and same thing with retail. So the data on one day might be accurate for retail, but it may not be accurate for institutions, or it could be the other way around, or it's not going to be accurate for either of them. So you do have to take these ownership percentages with a grain of salt. But now, a lot of people at this point, I know in the video, you're going to be thinking these institutions are buying and they're just loaning these shares out, and those other institutions are using those shares against us. Now, that may be true at the current time, but for these previous purchases, the shares have already been used against us. Because if all of these shares were purchased over the last couple of quarters, it's highly unlikely that all of these institutions have waited until just now to loan out these shares for them to flood the market with supply. Now, yes, they could be loaning these shares out, but this is what we really need to think about. And I think this concept right here has been overlooked a lot in this community when you think about these institutions and when they're loaning these shares. So when we come over right here, this is an FAQ section on BNY Mellon's website. So when we're seeing here, lenders can recall their securities whenever they want, for whatever reason they want, and they do not have to provide an explanation. All they need to do is ensure the request is made in good time so that we do not interrupt their investment life cycle. So what does this mean? It means that any institution who has loaned out AMC shares or shares of any stock in the market can recall them back at any time. Now, what happens when a forced share recall ends up going out? Well, whoever is holding that loan of shares at the current time and has that short position needs to go out into the open market and buy those shares back and return them to the original owner. So what we're seeing is these institutions, it's really up to them. If they have been actually loaning out these shares in a large enough way, in a massive enough way to really create that market that we have been seeing in that short interest, well, then it's up to them. If they all decide that they want to take their shares back at any given time, they could issue these forced share recalls and we could see a lot of buying pressure get added back into the stock. So that's kind of the two sides of the same coin. We're seeing that when these institutions buy, they definitely could be loaning out these shares to collect those borrow fee rates. But again, when we look at the borrow fee rates right now on AMC, 0.82% is not that much on the minimum. The average is 1.3%, and the maximum on today was 2.32%. So it doesn't make a whole lot of sense for these institutions to be buying shares to just loan them out right now, because the cost to borrow rates are not that attractive to these lenders of these securities at this time. And the other side of that is that even if they were loaning out these securities, they can issue these forced share recalls at any given time, and they really don't have to provide a reason. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.